Welcome friends to top-down analysis video part 2. I recommend that you go through the part 1 of this video for a proper understanding of the concepts that will be explained here. On the screen is the top-down schematics showing 3 different time frames. The higher time frame, which is the daily time frame in blue, the 4-hour time frame, which is the middle time frame in black, and the 1-hour time frame, which is the lower time frame in red. You may notice that the 4-hour time frame and the 1-hour time frame are not distributed across the entire structure. This is simply for the purpose of clarity. When you are on the higher time frame, daily in this case, the first thing you need to do is to identify the most recent break of structure. If the most recent break of structure is bullish, as in this case, then we say that the structure, the higher time frame structure, is bullish and it will be more profitable to look for buys. After a bullish break of structure, we expect price on the higher time frame to return to discount, that is to make this move. Having that in mind, we can now scale down to the 4-hour time frame and then look for either a distribution schematic or a break of structure that will give us the opportunity to take a quick sell down to the discount level of the daily range. Okay, when we are here, we know that we are already in the discount level of the daily range. Then we can now look for a break of structure, which is a bullish break of structure that will be in time frame confluence with the higher time frame. When we have a bullish break of structure, we now expect price to return to discount of the 4-hour trading range. Okay, when we have that at the back of our mind, we can now scale down to the 1 hour and look for a break of structure for a sell opportunity that we have here to take the price down to the discount level of the 4-hour trading range. When we are satisfied that we are on the discount level or at the discount level of the 4-hour trading range, we now look for a bullish break of structure on the 1 hour. By this time, we have time frame confluence across the entire time frames, the 3 time frames. When we have this, we identify the order block that was responsible for the break of this structure, and we wait for mitigation of the order block. There are actually several things you can do, but just for simplicity, we are going to take it like this. So we wait for the mitigation of this 1-hour order block to look for the buy opportunity upwards. And if we have traded from the 1-hour order block, we would have made 10 arrow, as in this case. Talking about the targets, if the uptrend, the higher time frame is in an uptrend, and if the uptrend is to continue, we expect price to be able to break this higher high for a new high, and so clear the external liquidity that actually lies above this high. Okay, so this is a comfortable place to, or comfortable level to place our targets. So if we hit the target after taking the buy from this order block, we make 10 arrow. But if we traded from the 4-hour order block that led to the break of the structure here, and we waited for the mitigation of the order block, we would have made about 3.5 arrow. In the same vein, if we have traded from the daily order block that led to the break of this structure, bullish break of structure, and we waited for the mitigation of the order block, we would have made about 1.3 arrow. So this is the idea of refining order block. When we refine the order block, as in this case we have a daily order block refined to the 4-hour order block, and then finally refined to the 1-hour order block. When we take the trade from the refined order block, our risk to reward ratio improves. I know that majority of us can also go further to refine this even further, but just for simplicity sake. The next slide should throw more light on the top-down schematics. Yes, we are on the next slide of the top-down schematic. Once again, we have the higher time frame structure, we have the middle time frame structure, and then we have the 1-hour time frame structure in blue, black, and red respectively. We have a thought process that we are going to work with, and the thought process is this: after a bullish break of structure, we expect price to return to discount, possibly to mitigate a bullish order block, and after a bearish break of structure, we expect price to return to premium, possibly to mitigate a bearish order block. Take note that price will not always do this. This is exactly what we mean. After a bullish break of structure, we expect price to return to discount, and after a bearish break of structure, we expect price to return to premium. This is the simple thought process that we are going to apply to understand whatever is here. Okay, now we are going to start with the daily, then the 4-hour, and then the 1-hour. When you are on the daily chart, you look for the daily time frame, you look for the most recent break of structure, and you can see that the most recent break of structure here is bullish. Okay, after we have that, we started noticing this retracement. Then we now created our daily range high and our daily range low. With respect to the daily range high and the daily range low, this is the current location of price. Okay, we can see that price is actually at premium, and so we expect price after a bullish break of structure to return to the discount level of the daily range. Okay, so we can say that on the daily we expect price to return to discount. When we are done with the daily, we now go to the 4-hour. Let's scale down to the 4-hour time frame and look for the most recent break of structure, which we actually have here, and so it is a bearish break of structure. And with respect to the 4-hour trading range, the price is actually at discount, and we expect the price to do what? To now return to premium, possibly targeting this order block. In the case of the daily, we are possibly targeting this order block that led to the break of this structure. So once again, this is the current location of price since all the time frames actually terminated at this point. So in conclusion, we are expecting that price return to premium on the 4-hour time frame. Now when we are done with that, we go to the 1-hour time frame, and we have this bullish break of structure. On the 1-hour time frame, we have the bullish break of structure, and after a bullish break of structure, we expect price to return to discount. So in summary, we expect the 1 hour to return to discount, the 4 hour to return to premium, and the daily to return to discount. When you consider taking trade, you need to start from the 1 hour. Now this is the current location of price. So if you look at, with respect to this range, price is almost at the middle of the range. So the best thing to do in this scenario is simply to wait for price to return to the discount level. Sorry about that. To return to the discount level, and this is what we have here. And then after returning to discount level, it means we have satisfied this condition. The next is to now expect price to return to the premium level of the 4 hour range, which is 0.2, and when this is achieved, then the final one is to expect price to return to discount, which is this. And from discount we can now trade, in the sense that the higher time frame trend will now begin the new impulse and take it to 0.4. Let me try to zoom in so that I explain some things in details. Now, how can we consider taking trades based on this scenario? Okay, like I was saying, how can we consider taking trades based on this scenario? Like we said initially, it is best for us to wait for price to get to the discount level of the 1 hour trading range, and from there we can look for a break of structure or possibly a distribution schematic. We can actually scale down to even lower time frame, but for the sake of simplicity, we will look for a break of structure, or an accumulation schematics to take price up to about this level, which is the premium level of the 4 hour trading range. So if we are now at 0.2, it means we have satisfied this second level. Another thing I want to say is that when you have a buy opportunity here, you can even decide to take your profit here at this swing 1 hour swing high, or you may decide to partial here and leave your trade until it gets to this other block as your target. Now we said we have satisfied the second level, price is now at premium. The next thing is to drive price down to discount. So we look for a distribution schematic, or it's simply a break of structure, however it presents itself, to now look for these sales. We are buying here, we are selling here, and we can even target this as our target. If we sell here, we can take it as our target or as our partials, and then drive price down. You can take it as partials as well, here as partials, just like that. You have different points that you can actually partial. It's advisable to be partialing along the way, because the market most times is usually funny. And so we can, after selling, we can drive price down to 0.3. Now we have satisfied this condition. 1, 2, 3 is not satisfied. Price is not here. If price is not there, then we can see that we are not ready to drive the price up, considering this new impulsive move. When we have a break of structure, a bullish break of structure here, then we can see that maybe on the lower time frame we have a proper time frame confluence, and taking this trade will be the most profitable one, especially when you trade from the beginning. So this is the thought process, and this is how top-down schematics can be done to the best of my knowledge. And you see there's an opportunity of buying here selling here and buying here. It's just for us to give us the idea of the direction of the market. Next, we are going to be looking at rechart example, starting with the first one, which is the GBPAUD example. Now we are on the daily chart. The first thing we noticed was a bullish break of structure. After a bullish break of structure, we expected the price to return to premium, which exactly it has done. Please don't mind these markings, they are just my personal markings as at the time of preparing this video. Okay, then the next thing is for us to scale down to the 4-hour chart. This is the 4-hour chart. We have a bearish break of structure here. This is just the 4-hour chart zoomed in. We have this bearish break of structure. You can see that immediately we have this bearish break of structure, and we started noticing this pullback. I already set my limit. My limit was set on the 1-hour time frame and also refined to the 15 minutes time frame, but you can see that the market actually didn't get to my limit. I was targeting somewhere around this low, or based on the 1-hour time frame, which is this. I was targeting somewhere here, but price didn't come to my level. This is the 1-hour time frame. Yes, this is the reason possibly why price did not come to my 1-hour order block that was here. The reason is because we have an order block here that was actually responsible for the break of this structure, and you can see that we have an imbalance giving more validity to this particular order block that led to the break of this structure, and that was the particular order block that price mitigated, and we have a very good 5.5 arrow trade. Now, I didn't see this at the time. It's all based on experience. This is why you need to spend more time in the market in order to capture this move. Now, when your order block failed to be mitigated the first time, it doesn't mean that it's over. You can also have an opportunity of a new sell if you look very, very closely, and that's exactly what happened. Okay, now if you look at this point carefully, there is also an order block that was here. There's also an order block, and in that order block, when I scaled down to the 10 minutes time frame, I saw that order block, and that is what we have here. We have a 10 minutes order block here, and I just want to show us the level of precision in the market. That's why one of the reasons why I actually appreciate smart money concept. You can see that this high, if you actually measure this high, is 1.88822 in price. This is not the 10 minutes chart, so you will see the 10 minutes order block. If we now scale down to the 10 minutes chart, you will see how price actually mitigated the order block at the tip. That is, the price reacted from the M10 order block with precision. This is the 10 minutes chart. Now you can see the order block. This is what we could not identify here. You see this circle, the same here, and we can see the 10 minutes order block, and you can see that the low of this order block was actually 1.88822, which is just the same thing, the same price as the high of this candle that ended up mitigating the order block. So most times when you are trading, you have to factor in spread so that you may most likely not miss the move. The next example we are going to be looking at quickly is the USD CAD example. Now we are on the daily time frame. We expect price to return to discount, so we have a short-term sell bias. This is what we expect price to do. Okay. On the 4-hour time frame, this is what price is doing. We now wait for bearish break of structure on the 4-hour time frame. This is the daily break of structure. Then what do we see? We actually have the bearish break of structure on the 4-hour. So we expect price to return to the 4-hour range premium, from where it returns to the daily range discount level. The H4 range low is a logical target. Why is it a logical target? Because if we are expecting price to return to this order block, then price will most likely break through this level. So we can take this as a target, and that is what we shall be using as we see at the end of this particular example. So scaling to the 1-hour time frame, sometimes you may not see anything really different, so you can begin to scale to the lower time frame. And when we scale to the 15 minutes time frame, we said that price was to return to premium on the 4-hour range. Sorry about that. We said that price was to return to the premium level of the 4-hour range, and that is what price has already done. You could have also taken an opportunity for a short buy to the premium level of the 4-hour range, depending on your experience. So price returned to the 4-hour range premium, and we target a 15-minute order block that led to the break of the bearish structure, that led to the bearish break of structure here. There was a 15 minutes order block that actually led to the break of the. So that is exactly the order block that we are targeting as price returns to premium on the 4-hour trading range. Alright, this is an error. M5OB is an error. It's actually a 15 minutes order block because we are on the 15 minutes time frame. So looking closely, we are using actually scaling to the 1 minute time frame for confirmation entry. It's possible that you could have traded from here, take what we call a risk entry by setting a limit here and targeting this low. Okay, but it's best for you to really wait, because you wouldn't know if the other block will actually hold, and so you scale down to 1 minute time frame, for instance, or a lower time frame, and look for the distribution schematics. And you can see that we have a break of structure here, sponsored by this 1 minute order block. Okay, step by step. Now we have set our limit using the 1 minute, our sell limit using the 1 minute order block. Look at the stop loss a little above it, and this is just showing the sell limit setting, and then this is showing us the target after setting the limit. The 4-hour range low set as target, since price was predicted to return to daily range discount. Okay, so this is what we have here. And the next step, once again, we just want to appreciate the precision of price. You can see how price actually mitigated this order block to the tip. Here the low of this order block was 1.27922, and the high of this candle that mitigated the order block is exactly 1.27922. As you can see, this is just to show you the beauty of price distribution. And this is finally our target is met, and this was supposed to be a very nice trade, which is 31 arrow. I did not take it straight, but I believe that as time goes by, my eyes will be more keen in looking at this trade. But just for the purpose of illustration, you could have possibly have a 31 arrow or even more on this trade. So I guess that's the example 2, and I hope you grab the logic explained here. So quickly we are taking example 3, which is the Euro USD, and this is very recent, very recent. Majority of these examples are very recent, as you can see, October 20, 2021. So we are on the daily chart. After a bearish break of structure on the daily chart, we expect price to return to the daily range premium. Okay, so we expect price to return, which it has already started doing. When we start noticing this pullback, remember, we now mark our daily range high and our daily range low. This is the 4-hour chart. It's after a bullish break of structure on the 4-hour chart. Price already returned to the order block. We expected price to return to premium, but take note, there was a very good order block that was here, and price could possibly react from this order block, which it did. Now price has already returned to the order block. Actually, this trade has taken place, but I'm just explaining the thought process. Price has already returned to this 4-hour order block that was here under the 4-hour range, okay, trading range. So this is just explaining in details whatever we see here in this circular section, and we have it here as well. And you can see that under the 10 minutes time frame, we have a 10 minutes order block that actually led to the break of the structure, and you can see that price actually went to mitigate it. And what a beautiful trade. Once again, I didn't see this trade, I didn't take this trade. Great opportunity for counter trend sell as price returns to order block. All my focus was here, this 4-hour, this is the 4-hour order block, so all my focus was here. I actually waited for a confirmation entry, which I got here on the 15 minutes chart. Just to explain more, you can see liquidity engineering here, liquidity engineering, and price actually grabbed the liquidity. In place of grabbing the liquidity, was very close to mitigating the order block. But if you have considered spread, you would have been in this trade as well, hopefully. You see, this is a kind of trend line liquidity pool, and price grabbed the liquidity, tapped on the order block, very close to tapping it, and then you can see where we have an approximately equal low where liquidity is lying below it. That's where just before the 4-hour order block is a very good sign that price may likely tap the 4-hour order block. And you can see how we created the 15 minutes order block here that led to the break of this structure upside, and then this is a trade I actually took, and price came, mitigated the order block, and that's exactly the trade that I took, about I think 4 point something arrow. So these are just explaining this, and you can see the price created equal high. We have liquidity above, resting above the equal highs, and price actually break this high. Okay, so this is the way we can actually make use of the advantage of understanding the top-down analysis in this way. I just hope that this video has been able to create some value. That's my hope, and if there's anything any one of us can share that will benefit the viewers, it would be highly appreciated. Once again, I want to say a big thank you for your time, and I wish you the best in your trading. Goodbye.